Let's get you up to date on the latest information when it's affecting the markets. I'm John Jenkinson. We'll start over here with the overnight sales. There was corn and soybeans both sold on the overnight trade, and it was to Mexico. First, let's talk about the corn sales. It was broken down into two different categories. One was for this year, the 18-19 marketing year, 142,248 tons of corn, and the other one for 2019 and 2020, so this will be the next new crop, 71,124 tons of corn, and that was headed for Mexico, and then a sale of 142,500 metric ton of soybeans that are going to be bound for Mexico. So a couple of pretty good overnight sales. On to the corn market we go, and we've been about a penny to two lower throughout a good part of this morning's trade, and that's about where the range is right now, with September down 1.5 at 356 1/4. December corn down 1 3/4 at 370. The soybeans, on the other hand, back to the higher side here on this Monday, with September up 2 3/4 at 853 1/2. November soybeans up 3 1/4 at 865. But the wheat market, double-digit losses, with the September Chicago wheat down 13, July wheat down 9 for the Kansas City contract. September Kansas City wheat down 16 1/2 at 543 1/4. July down 14 1/4 at 599 1/2. September Minneapolis wheat down 14, and July Minneapolis wheat down 13 1/4 cents. The December cotton contract is down 314 now at 82.09. We've got a low just off of that, 82.07, and now that's quite a ways away from our high of that contract, 85.31. Standing by at the edge of the trading floor in Chicago, joining us right now from the CME Group, it's Scott Gecas with Long Leaf Trading. Scott, let's first of all talk about this grain market. What are your thoughts here today now that we are post-report? What are you hearing on the floor?
Yeah, the report on Friday, I mean, with soybeans in particular, you had a huge flush, huge volume. It wiped out about 13, 14 trading days, you know, as well as it was the largest increase in volume in a single day in about the same amount of time, 13, 14 days. So, you know, the mood on the floor is just keeping an eye on the headlines. China's looking to South America and Canada to fill their soybean needs. However, they did accept a cargo today. It's the first time since I believe it's June that they accepted a soybean cargo. So, you know, with that news, with them going to Canada and South America, it's starting to ramp up where they're going to have to buy U.S. soybeans, and that's just one of the confirmations that we're looking at right now. One thing I wanted to point out in the corn market, though, is the yields are about 178 versus 176. The world ending stocks and usage ratio is about 14.1. That's the lowest since 1973. That's pretty significant.
Long term, what does that tell us then? Maybe that there's still some room to grow in the corn market?
Yeah, and that's exactly what we're looking at. A little bit more room to grow. So we're going to see how this is going to play out for the next couple of weeks here.
Okay, Scott Gecas is here with us, and when we come back, we'll be talking to Scott about the livestock trade and get you up to date on those numbers as well here on the Market Day Report. Over here in the protein complex, the cattle market a little bit weaker, but the hogs are having their own little rally here today. Let's first go to the cattle market. We'll start with the live cattle board, and here we find October down 103 at 108.22, December down 95 at 112.15, February down 68 at 115.70. This is after about a $3 less cash cattle trade last week, particularly on those live cattle there in the south. On over to the feeder cattle market, and we've got pressure over here as well. We see where the September is down 97 at 148.55. October feeder cattle at 148.68, that's down 80. November at 149.15, that's down 77. I mentioned strength in the hog complex here today, and we see where October is up 80 cents right now at 51.98. December up 120 at 48.68. Back up here in quote August, up 75 at 55.55. And Scott Gecas is standing by for analysis. Scott, this hog market here, 55.55 on the front month, a little bit higher. It's been a while since we've seen a little bit of strength, maybe I shouldn't say strength, but at least firmness come back to the hog complex.
Yeah, it's particularly with the hog market. I think we're going sideways, consolidating around that 55 level. Everybody I've been talking to, traders, funds, everybody's waiting for positive news out of NAFTA. If they get anything positive with Mexico, you're going to see that market spike really high, a lot of volume, a lot of volatility. It's just going to go straight up.
I want to ask, while we're on that topic, you bring up a good point. I want to ask you what your thoughts are when we get some kind of an agreement, because there are some in the trade that say it's not if, it's when. Can you kind of describe for us what the trade is expecting, or what it might be like if there would be some kind of an announcement, either with NAFTA, with Mexico, with Canada, or with China?
Yeah, specifically with Mexico, there was rumors last week I was on talking about they're going to remove the 20% tariffs. So that's part of it. If they also get anything positive news out of a deal with NAFTA, not only just the 20% tariff pullback, but you're going to see that spike really fast, really high. And you got to remember, with all the news and all the technology now, if anything hits the wires, all the funds, all the algorithmic traders all have their finger on the button. You're going to see a big spike really quick. If you have any type of short position, you're going to get stuck, and you're going to see a big short covering with that happening.
Interesting. Scott Gecas, Longleaf Trading at the edge of the trading floor. Scott, thank you very much. Always good to talk to you. We'll talk to you again soon.
Thank you very much.
All right. Thank you very much.